What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. We're going to do a trade breakdown this morning along with a live payout video footage thing towards the end. So let's get into it. On my small account today, 10K account that I started up yesterday, currently up 50%, $5,000. And we're going to review the trade today that made me an extra 25%. So weekly chart, we have an old new week opening gap, and I'm also watching the upper quadrant of this wick. Now, why am I looking at this wick? Well, we've traded down, and these two weekly candles here don't really give me a lot of information, so I'm looking through the candles, and boom, we have the wick. So that's why I'm referring to that level. So upper quadrant of the wick, old new week opening gap, those are my two levels from the weekly. Daily chart, I'm taking off that new week opening gap and I'm slapping on our current new day opening gap, which is here. And the reason I'm doing that is just because they're a little clustered and it's a little messy, but I will slap that back on the intraday charts. So current new day opening gap, and then I'm also adding this fair value gap along with its quadrants, lower quadrant, midpoint of the fair value gap, upper quadrant, and then the high. Include the volume imbalance in the fair value gap. So that is the low. All right, so just a few levels. New week opening gap between those two candle bodies. Upper quadrant of this wick. Current new day opening gap between these two bodies. And then our fair value gap. 15-minute chart, really zoomed out here just so you can kind of get the full picture. Here's that daily fair value gap. We're repricing that in. I'll make sure to silence my phone. So repricing in that fair value gap. And here's our entire business here in the morning session. Zooming in, same 15-minute chart. We have sell-side liquidity, and with the gray shaded region, that is our morning session from 9:30 to 11 o'clock. So we open at 9:30 here and trade lower. Before I go any further, if you can hear the lawnmowers and noise in the background, I apologize. Can't do anything about it. But we open at 9:30, trade down into old new week opening gap, our current new day opening gap, clearing out sell side liquidity. We have midpoint of this 15-minute imbalance. Now notice we have two 15-minute fair value gaps stacked on top of each other. The general rule of thumb, if you're bullish, you want to see this lower one here stay open, and you want this one, the higher one, to offer support. That is the general rule of thumb if you're bullish. So we trade down, just fall short of that upper quadrant of the wick on the weekly chart, that's fine. Just fall short of the midnight opening price, that's fine. In this instance, will we want to trade down to the midnight open? Well, what's the logic in price? This should act as a breakaway gap. That should not be traded to. Where's the midnight opening price? Right above the high of that fair value gap. We want support here. Okay, so there's a lot of factors that are signaling that this thing is bullish. But let's go ahead and zoom in a little bit more. 5-minute chart. So here's our 9:30 candle. We trade down into our new week, new day opening gaps, 15-minute fair value gap in its midpoint. You can also see an inefficiency here. Sell side, the fact that we just fall short of the upper quadrant of that wick, just missed it there. And then the fact that we just fell short of that midnight opening price, and then we snap all the way back up and we close above the new week opening gaps, new day opening gaps. That right there, I'm seeing that as very bullish. We don't even have the willingness to reach those two levels. Trade higher into relative equal highs. Come all the way back down. We did have Fed Chair Powell speaking at 10 o'clock. 10 o'clock gets here, and then you can see the carnage it did. Order block on a 5-minute chart. The opening price to the high of the wick is your most sensitive price point for a order block. Midpoint of that wick is the same exact price level of the opening price here at 10 o'clock, and then it's off to the races. Same 5-minute chart, but now we are in regular trading hours, so you can see our regular trading hours gap, our opening range gap. The breaker, okay, if you watched yesterday's video, I used this as a catalyst for my long entry, and that was my exit in the PM session yesterday. So we open today. We have buy stops resting above this high. If we are bullish, okay, when we open above that high on regular trading hours, anybody looking to go break out long, anybody looking to buy above this high, they are now trapped in their long. Once we open and trade one tick, they're trapped. It's over with. Or Anybody holding longs from previous day, like I was, let's say I was long here, and let's say I was still holding. They're in their long. Okay, what's ideal? We just open at 9:30 and trade higher, higher, higher. That can happen, sure. Or do we want to take advantage of those buy stops, tag them in, run it against them, and then work higher? That's more ideal. So once I see that we've done some damage here, we've traded down to the low of our current opening range gap, the stage is set for higher prices. So I just want to throw that in there on regular trading hours. But let's head back to electronic. We're now on a 1-minute chart, zoomed out just so you can get the full picture again. Sell side liquidity, relative equal highs. Look at the bodies respecting our old new week opening gap, 15-minute fair value gap, consequent encroachment, and then again just falling short of the upper quadrant of that wick on the weekly, falling short of the midnight open. Once we move away like that, that's bullish. Same 1-minute chart, just zoomed in now. Judas swing at 9:30. This opening price is your 9:30 open. We trade down. This is when narrative is important. We're not seeing this as the 2022 model, buy side taken, market structure shift, bearish fair value gap, let's short it. What's the narrative? We're beneath our 8:30 open. We're trading into a cluster of new week, new day opening gaps. That 15-minute chart, remember, we have two imbalances stacked on top of each other on a 15-minute chart. The general rule of thumb is you want this one to support price. So we're trading into that. Can't reach the midnight open, can't reach the upper quadrant of that wick, trade higher. This is a Judas swing. This is offering a deeper discount for everybody like me who's waiting for longs. If we want to long, if we're looking for higher prices, do we want to open at 9:30, trade higher, and then buy up here? No. Let's tag in the buy stops on regular trading hours. Let's take out sell side. Let's clean that up as well. And now we can get long in this region, and you can see how much range that offers for profit taking. That's ideal. So this is a Judas swing that's taking out sell side, is offering a discount, it's trading into all of these PD arrays, sets the stage for going higher. 15-second chart, which is what I use for my entry, inversion fair value gap. All right, and I did take a loss first. So we worked the inversion fair value gap in its midpoint, old new week opening gap, displacement higher. I like that. I'm buying this inefficiency. Doesn't work out. I take a loss. No big deal. Going back in, once we start leaving the inversion fair value gap, I'm showing my entry right there as we open at the low and start leaving. I'm using that as a buy, buying 2 contracts. Come back down. I'm adding another one right there as we start, again, leaving the inversion fair value gap. I'm buying another one, and I'm closing 3, my full position at the relative equal highs here. All right. Now, just a little side note, I did go in long first with 1 contract because this is a new account, 10K account. I'm still getting a feel for the risk management and whatnot. So when I took that first loss with 1 contract, it was pretty much like nothing because this is a 15-second chart, so you can have a little bit of a tighter stop loss and risk less. So once I saw that that loss was very minimal, I'm comfortable going in with 2 and then even adding another one to build that position up to $2,500 as a result. All right, and here's the final business, okay? This was yesterday, that long, including a loss. So I took 1 loss yesterday and then a win. And then fast forward to today's morning session, I also took a loss today, needed to re-enter, and then the trade pans out. $2,500 on the day. The account balance started at $10,000. We're now up $5K, so that is a 50% gain on the overall account balance. And it only took 2 winning trades to do it, 4 trades in general. So I hope this is motivating for you. Yes, I have a separate larger account, but it's not needed. You can do very well with a smaller account, a 10K account, and you don't have to be perfect. I took a loss here. That's fine. I took a loss today. That's fine. So I lost 2 trades. I won 2 trades, and I'm up 50%, $5,000, and we're going to do that withdrawal here in a little bit. And look at all of this that I didn't get to participate in. That's fine. No big deal. So with risk management, the ability to scale in, add into your winning trades, keep losses minimal, losing trades don't mean anything. And then you can see that as a result here. connected green dot, all that verification stuff people care about. It's all there. So let's go ahead and get into the withdrawal, which is my favorite part of the video. And yeah, I love y'all, man. Peace.